everyone, hello my money friends, welcome back to the channel. Dunk here from Dunk's Money. If you are a subscriber, thank you very much for subscribing. I really appreciate the support, and thank you for all the liking and commenting on my previous videos. If you are new to the channel, I'm Dunk. I'm from Scotland. I'm an entrepreneur and then I'm an investor. I'm really interested in finance, and this is my YouTube channel where I will share stocks and shares sorts of tips, financial issues and other sort of money matters. I'll be posting videos here, so make sure to subscribe so that you get all my latest videos, and I hope that you will enjoy them. I started off in the world of finance about five years ago or so, and I understand that it can be quite confusing at first, but don't worry, you will get there. Keep watching the videos and watch other folk as well, and you'll learn lots more about finance. I hope you enjoy. Hello YouTube, hello money friends, welcome back here to another video on Dunk's Money with me, Dunk. So today we're going to speak about 4IMPRINT. You've maybe heard of them. 4IMPRINT are a relatively large company listed on the London Stock Exchange, and like many of my other videos that I've done, today we'll look at that company and I'll show you me buying shares in that company and just the financials as to why I quite like the look of them. So, bit of information. 4IMPRINT are based, their headquarters are in London, and they've got 1,200 employees, and they specialise in sort of marketing products, quite similar I suppose you could say to Vistaprint type, in that they specialise in that kind of free marketing pens and things like that you as a business owner could give away to your customers. All promotional type of products, and they operate within the USA, UK, Canada and Ireland. So they've got a foot in a few countries there. And like I say, they sell a range of promotional products. So if we have a look at 4IMPRINT and some of their key ratios that we really should be checking, guys, before making a purchase. Their market capitalisation, remember the market cap is the number of shares owned by investors times the current share price. So if you do that, you come to a total of £685 million. So a fairly large company, not the biggest we've seen, but they are relatively big. Price to earnings ratio. Now, price to earnings ratio, guys, is the stock price in relation to the company earnings, and we do tend to try and aim for a low PE ratio. In this case, their PE ratio is 20.2, so it is on the higher end, you could say, and their earnings per share of £1.21. So at least it's positive, it's not negative. I have bought into negative earning per share companies before. Dividend yield of 0.84% at 21 pence a share. However, sadly, they've cancelled their dividends for 2020 to try and raise £16 million of sort of capital to help them get through the current coronavirus lockdown. So it's what it is. I suppose you'd rather that than the company collapsed, So I don't mind passing on the dividend for this year. We'll see what happens in 2021. Their beta, now remember the beta score, guys, is a measure of volatility. Their beta is 1.62, so a score of less than 1 tends to mean that the stock price hasn't changed more than the overall market. So in this case, their stock price has moved more than the overall market, so they're a bit more volatile, a bit more risky. So that's what you can take from the beta score. Now their income has grown from 2017 to 2019, so that's their revenue or total sales has increased to £860 million. Net profit, which is the key, their net profit has stayed the same roughly over 2017 to 2019. In 2019 they made a £42 million profit, which is decent, not to be sniffed at, which is a 4% profit margin, so not too bad. Total assets, this is the balance sheet now, guys. Total assets £137 million. And excuse me for looking at my notes, I just want to make sure I'm getting you the most up-to-date information. And total liabilities of £74.5 million, bringing in a debt to asset ratio of 54%, which is really nice. That's a nice low debt to asset ratio. Not the lowest, but certainly not the highest. I mean, if you look at, for example, Boeing, they've got more debts than assets, so 54% of their total asset value is debt. So no, I'm quite happy with that. And just out of interest for you, their share price today compared to this time last year is down by 26%, and their 3-month average volume of 1.86. So we can see probably the lockdown has affected the share price in causing it to drop so dramatically recently. what we'll do now, guys, we'll jump into the app, and you can see me buying shares in 4IMPRINT, and that was on the 3rd of June 2020. So let's jump into the Trading 212 app and watch me buy the shares. Hello everyone, welcome back into the Trading 212 app here today with me, Dunk from Dunk's Money. 4th of June, and today I've been making quite a few trades. So today I'm going to buy some shares in 4IMPRINT Group. They're a UK based company, they specialise in sort of marketing services. So 4IMPRINT Group, if we have a look at the chart over the last year, you'll see there, look at that. Let's reckon, is that, do we think that's February? Let's have a look. March, right. March time it was down to £13 and now it's up at £24. London Stock Exchange lists their prices in pennies, which is annoying, I know guys, but it's the way they work it. So let's have a look at some of the peaks. £33, now it's 24, right? So I'm quite happy to buy, so I'm going to buy some. Right, I think what I'm wanting, guys, here, I'm going to buy 4 shares, which is about £100, £99.90. So I'm just buying 4, and I think this will be, from memory, I think this is actually the first sort of marketing shares or marketing firm shares that I've bought in the portfolio. So I'm going to go for those 4, £99. Let's go for it. Should come through pretty quick. Let's go for it. Yeah, so that's 4 shares at £24.85 a share. So I'm quite happy with that. I'll leave that and let that sit and let's see what happens. I wonder if you own the same shares. Let me know. So as you saw there, everybody, I managed to pick up 4 shares at £25 a share, roughly. And in December 2019, they were at £35 a share. So they're £10 less than they were a few months ago. So I'm happy with that. So I'll leave that to sit and we'll see what happens with it. I tend to try and do things long term, unless you've seen any of my previous videos, Damn Nicola, where I've stupidly speculated, but I do tend to look at the long term. And just out of info, some stuff I was reading, like I was saying, they've cancelled the dividend to raise £16 million to see them through the lockdown. And an article I was reading online was explaining that 4IMPRINT, compared to their competitors, have got far larger cash reserves to help get them through the lockdown. So that's quite a good indicator of strength for this company. So no, I'm quite happy. We'll wait and see how it goes. If you guys have any shares in 4IMPRINT, comment below and let me know what you think of them. And as always, if you're new to the channel, please remember to hit subscribe. You'll get all my videos as they come out. And thank you to those of you who are subscribed. I do appreciate the support. And as always, stay safe, enjoy trading, and I really hope you enjoyed this video. And thanks for watching it. See ya. So I really hope you enjoyed that video there. Thank you very much for watching. Please comment below and tell me what you think. If you like this video, please make sure to like it. And please remember to hit subscribe and you'll get all my latest videos. All the best, guys. I'm Dunk and I love money. So should you.